Hello and welcome to the Bitcoin Cash podcast, episode 8. Today is the 7th of March 2021. It's a Sunday and I am streaming this episode live again. Unfortunately, with this particular episode, we don't have there's no guest. And that is because I was going to do an episode with a guest yesterday, but my internet completely died at the time we were going to do it, so we might have to try and reschedule that. So that's unfortunate, and also my camera is broken if you're watching the live stream as well. Oh look, Tihotech says hi. So instead, I've decided to do a solo episode, just like I did with my first episode, which was one of the more popular ones. So I don't know, maybe this would be a good way to mix it up every once in a while with the topics and everything. But I will actually be trying to follow the live chat as well. And in this episode, if we get any viewer questions, I'll try and include those at the end as well. So the topic for today that I wanted to talk about is the path to global adoption, and then the viewer questions. So I think this is a pretty big topic. Obviously I think it will be split up into several components eventually, but this is my first stab at it to really give some sort of reasoning as to why I have the stream subtitle following Bitcoin Cash on its rise to global reserve currency, which I believe that's the end game. I think Bitcoin Cash is going to be the future of of all currencies, like I said in the first episode, and I still think that now. So yeah, we'll just explore some of my reasons for that in this episode, I think, and maybe get a bit of a start on why I'm confident, I guess, that it would be able to go the distance there. So let's start with the stats update that we do every week. So the current price is about $509 per Bitcoin Cash, and you can currently buy 99.847 Bitcoin Cash for 1 Bitcoin. So it's nearly a 100-to-1 ratio. So obviously that's not necessarily the best indicator if you're a strong believer in Bitcoin, and we'll get into this. Then you might say, look, okay, it's literally only 1% of the value. It's all over. You know, the market has decided, right? That's this common refrain of Bitcoin supporters. But I obviously don't believe in that so much. I mean, I think it's unfortunate that Bitcoin Cash is so much undervalued relative to Bitcoin, but I do also think it's an opportunity, right? You're getting 100-to-1 odds that Bitcoin Cash can outcompete Bitcoin. That's the setup that the market is offering you. And I mean, even if you didn't know anything about cryptocurrencies, what you could do is just buy $1 of Bitcoin and $10 of Bitcoin Cash and just invest in that ratio, and then whichever one $100. Really, you could buy $1 of Bitcoin and $100 of Bitcoin Cash and invest in that ratio, and then let the market sort it out, because what matters in an investment is not necessarily the change in nominal value. So if Bitcoin goes up from 50,000 to 55,000, that's a 10% increase. That's the exact same as Bitcoin Cash going up from 500 to 550, right? So the percentage change is what matters, not the real, not the nominal value. And also, a smaller currency is easier to appreciate with a smaller market cap. So I mean, that's an aside. People can invest in whatever ratio they want, but for the reasons that we'll get into in this podcast, I'm entirely unconcerned, basically. about the price differential. Right, so here's one reason that I'm unconcerned. So we've been following the transactions as they go, and on a weekly sort of basis, and the Bitcoin Cash transactions, after leveling off here for about a week or maybe a week and a half, have started ticking up again, and are now doing close to 350,000 transactions each day, while Bitcoin at the moment is on a little bit of a downtrend, and it's fallen under 300,000, maybe 280,000. So Bitcoin Cash is now at an all-time high in terms of the gap between Bitcoin Cash and Bitcoin in transactions, and I predict that basically that gap will just keep growing. But not only will the Bitcoin Cash transactions grow faster than Bitcoin, because as we've discussed before, Bitcoin is basically capped at between 300 and 400,000 transactions and never goes over that because of its 1 megabyte block size limit. But also the rate of change will be improving on Bitcoin Cash. So as it grows, it obviously builds more of a network, and then it grows faster because there's more people involved, more people trading, more commerce that you can do with it, and more people spreading the word, and so on and so forth. So people are really bad at thinking in exponentials, right? It's why high school calculus, I think, is a very, very important subject that not everybody necessarily has a complete understanding of, right? But the rate of change is more important than the actual growth in nominal terms, because the faster something grows, the faster it grows type idea. Right, so that's good news there for Bitcoin Cash. It's on the way up, and it might continue heading in that direction. Okay, so this is a solo episode, like I mentioned before. So unfortunately, I've had internet issues at my house. We had some last week, still having it this week. So the opportunity that I had with a guest didn't really come to pass. Just unfortunate. But we might try and do some few questions at the end. And I also want to make the point that this is a very, very speculative episode, that leans far more heavily on my own opinions than potentially previous episodes. Like all of the episodes are to some extent my own opinion, and everybody's free to agree or disagree. But in this case especially, I really encourage everybody to I'm just one person. I think I've got it right, but you don't necessarily agree, and you shouldn't take my word for it. Do your own research and come to your own conclusions, right? So you can listen to the previous episodes of the podcast or future episodes of the podcast. That's definitely a good start, but also find other sources of information and figure it out for yourself. Okay, so for Bitcoin Cash to get adopted as a global currency, to be the premier currency that is used in the entire world by people, by corporations, by governments, by organizations, charities, and so on and so forth, and also, of course, by robots, let's not forget, whether it's trading algorithms or self-driving cars or whatever, vending machines, whatever stuff that we build the technology into, cryptocurrency does have a massive advantage over fiat currencies in terms of being easy to integrate into automated systems. So that is a part of the story. Maybe I'll do another episode about that at some point. But for the time being, we're going to just focus on, so to be the global reserve currency, Bitcoin Cash needs to basically outcompete 3 categories of competitors effectively. So The first category is, of course, fiat currencies. So that's the government money that everybody is familiar with. So the US dollar is an example of that, but also the euro or the yen or the Chinese yuan or the Australian dollar or anything like that. They're all fiat currencies. So fiat means by decree, basically. So the government declares this is the money and everybody has to use it to pay their taxes or for businesses in that area in general. And so that's obviously what people are most familiar with, but I think if they can all be basically grouped into one category because they all have fairly similar properties, really. So the second thing that Bitcoin Cash needs to outcompete is, of course, Bitcoin, and I've discussed that a little bit on the previous episodes, and we will talk about that in this episode too. But it's in a category of its own because it is obviously the king of cryptocurrencies. It has the number one market cap, and even though Bitcoin Cash has split off and it does go back to the Genesis block, so actually Bitcoin Cash is as original, in quotation marks, as Bitcoin. Nevertheless, it is true that the Bitcoin, as with the BTC Bitcoin branding now, is the biggest cryptocurrency, and no crypto to date has really come that close to dethroning it or replacing it as number one. Ethereum has been number two for quite a long time now, and it is still, well, let's just quickly check. It's in a decent ratio against Bitcoin. So let's see right now, Bitcoin Cash, Bitcoin is at 945 billion market cap, and Ethereum is at 191. So Bitcoin is still roughly, 4.5 to 5x as big as Ethereum. And if we have a look at here, the dominance indicator, right? So BTC is 60% of the entire cryptocurrency market cap, and Ethereum is 12%, and then the rest obviously tail off from there. So, like I explained in the first episode of this podcast, the dominance there has decreased for Bitcoin over time. It used to be over 95% or 90%. So now down to 60% it has actually lost a lot of ground, but it is still the king, right? And ultimately, if you want to be number one, which I think Bitcoin Cash is aspiring to be, then you've got to take out Bitcoin at some point. So that's the second category. So we've got fiat currencies, number one, Bitcoin, number two, and number three is basically every other kind of cryptocurrency, right? So I'm going to lump all them together, even though there are some subcategories in that. But essentially, we've got to you can just consider everything else as being in a third category, right? So you have Ethereum, obviously, you have Ripple, you have Litecoin, you have Tether, you have Stellar, Cardano, Monero, Dogecoin. Just all the other cryptocurrencies are essentially in the third category in my mind. So we're going to look at each of these three categories and have a discussion about why Bitcoin Cash could outcompete each of those three categories, and therefore get to number one and be the biggest currency in the world, the most used and the most adopted. Okay, so we're going to start with other cryptocurrencies because I think that helps to set the stage, and it's also perhaps the most clear or the most believable to other people, right? So I've grouped these other cryptocurrencies into four main categories. So the first category is smart contract coins. So that's Ethereum is obviously a classic example, is the biggest example of that, but there's a lot of these other ones, right, like Cardano, Polkadot, Binance Coin, etc. And what they're all trying to do is to make the decentralized computing, right? They're not focused on being a currency in terms of you go to the shop and you buy a hamburger and you trade your cryptocurrency for for a meal. Instead, it's more about taking the idea of having a decentralized currency that decentralized platform that nobody is in control of, and allowing permissionless innovation in terms of apps, right? So it could be like the App Store. Basically, we've got four categories in other cryptocurrencies subcategories. So we're going to start with smart contract coins. So Ethereum, all those others, they're trying to make decentralized currency, not decentralized currency, decentralized computing. So things like we've seen recently this craze around DeFi, right? Decentralized finance, which is the idea that you could have, for instance, an exchange allowing you to trade a cryptocurrency pair, but instead of trading against another person, so on a regular exchange, I want to buy Bitcoin Cash, somebody else wants to sell Bitcoin Cash, so we meet and I swap them Australian dollars for Bitcoin Cash. And the exchange just facilitates that trade. It just matches up people who want to trade with each other. But in a decentralized finance model, instead you can have a bot that owns some not Australian dollars usually, because it's all on the cryptocurrency, right? But it might own some Ethereum and some Bitcoin Cash. And if I have Ethereum and I want to buy Bitcoin Cash, I can just trade with the bot, and then the bot will adjust its prices based on the supply that it has of each of those two assets, and then price the market that way. And then if you have a lot of those bots with all the different trading pairs and all the different assets, you can have other bots that trade around between those between themselves, so that the market price all evens out as well. So that's Ethereum, and that's a lot of those other ones. So we will come to them, but the main point is that they're not really trying to do payments, and because they're not really because they're trying to do all these other sort of financialized applications and stuff, not necessarily just consumer transactions for goods, they are not really distracted, but they're on a different mission, right? So Bitcoin Cash is not really directly competing with them. Okay, so we've got the second category, which is these payment coins. So I think Bitcoin Cash is the prime example of that. And originally, Bitcoin Core, BTC, was the primary example of a payment coin, but it's now changed its mind, and its community has decided to be the digital gold or whatever. So they're not really in the race to be a consumer payments technology, and it's pretty easy to understand that, because there stopped being news about new merchants adopting Bitcoin. It was back in the day that stores were starting to accept it and all that, but besides Tesla very recently, who are a unique case, in the last 3 to 5 years there's been virtually zero adoption of Bitcoin as a consumer daily currency, because the fees are too high and it's not feasible, and the community has changed their mind and moved away from that. So Bitcoin Cash is now basically the leader in that category, but there are others, right? So there is Monero, which is a bit more focused on privacy. There is Dash. There is Dogecoin. Even though it's a joke, it is sort of more in that vein of consumer or casual payments. And there's a lot of other ones, right? And so the advantage that Bitcoin Cash has over all these other coins is basically the network effect. Bitcoin Cash is currently bigger, and it has a stronger brand than all of those other currencies. So in that respect, it is I think going to outcompete them, because the more people you can trade with in a currency, the better that currency is. And like we were discussing with the exponential growth, the more something grows, the more it tends to grow. So in that way, Bitcoin Cash should hopefully not only already have an advantage over those coins, but it should be extending its advantage at a faster and faster rate that the other coins won't be able to catch up on, in terms of the development in the protocol and the productivity of the community and all those sort of things, right? So that begs the question, if the network effect is so important, of why would Bitcoin Cash be able to outcompete currencies that are bigger than it, right? So how would it outcompete Bitcoin, or how would it outcompete the US dollar? And we'll come back to that. But for the time being, let's just say that Bitcoin Cash, largely because of the network effect, will be able to defeat smaller payment-focused coins, such as Monero, Dash, Dogecoin, and all those. Okay, so then we have the third category of other cryptocurrencies is stable coins. So this is things like Tether or USDC, which is issued by Coinbase, and they're basically digital tokens that are trying to replicate fiat currencies in some sense, or to they're pegged somehow to a fiat currency. So with USDC that's issued by Coinbase, Coinbase says we've got a stash of however much, $1 billion USD or whatever in the bank, and then we're going to give you these tokens. You can swap with us USD into our bank account, and we'll give you USDC, and then you can also swap back. So if you have USDC, you can swap it back to us, and we'll send you the USD to your bank account. And even though these are in some senses like a payment coin, they're obviously distinct from the previous one because they don't really benefit from the cryptocurrency capability to have a lack of central control, right? So even if a USDC can be kind of have the good parts of a fiat currency where it's a bit trusted or it's known, it does suffer from the downsides as well, that a government is in control. So if the government regulates it, or if the government prints a lot more of them and devalues the existing supply or whatever, then those things do impact on the USD C, whereas cryptocurrencies that do not have a government or a company or somebody centrally in charge of them are able to have a fixed limited supply that you can believe in. They're able to have uncensorable payments, so there's not somebody able to come in and adjust who can or who can't be paid according to their own whims, and so on, right? So again, Bitcoin Cash is not really competing with those stable coins, and in fact the stable coins I think are quite good for the cryptocurrency ecosystem. Tether is maybe a bit of an exception because I think it's a bit of a scam and they don't have the reserves that they claim, so it might turn into a bit of a disaster. But for something like USDC, which is run by Coinbase and is audited and all of that, all that it does is it makes it easier for people to move from the fiat currency into the cryptocurrency space. It's basically creating an on-ramp that benefits Bitcoin Cash and every single other cryptocurrency by reducing the barrier to trade between those different currencies. So that's a really good thing. Okay, so then we've got the last category, which is centralized and or irrelevant. So there's a lot of things going on in the cryptocurrency space. Can't really talk about every single one in individual detail, but if it's not a payment coin, a stable coin, or a smart contract coin, then it's probably just tiny and not really worth talking about. Or it's like Ripple, which again is centralized. It has a certain number, it's not just anybody can sign up, or it's not run by the community. It has a certain approved set of people who are running it and who are in control of how everything happens, how the money supply gets issued, and so on and so forth. So it has the same problems as the stable coins, where a central authority provides its own pros and cons, right? So it limits the currency in some senses and makes it more useful or scalable in others. But because it's centralized, it's not a direct competitor to Bitcoin Cash, which does not have those problems. Okay, so let's talk about Ethereum, right? And Ethereum is the premier smart contract coin, and you can think of all of the other ones as basically being the equivalents of Ethereum in terms of Bitcoin Cash's ability to compete with them. So cryptocurrency is complicated, right? It takes a lot to explain and for people to understand that the point of a cryptocurrency and how it works and this and that, right? So it's taken so much time to get everybody on board with the idea of Bitcoin, and even then 99% of people still probably just think all of cryptocurrency is just Bitcoin, or and they don't know about the subtleties or the distinctions between all the different coins, and that's fair enough, right? So really what we're trying to do is get everybody over the hump to just using payments, creating a bit of a digital economy. That is already insanely difficult. Now, if you throw in the mix, okay, we're going to add in all these smart contracts and DeFi and bot trading and all those things that I was talking about before, and who knows what they'll be adding next. It's just too experimental. Cryptocurrency is already a huge step forward, just the idea of trading coins and being able to trust them as a currency. So with Ethereum, it's not going to be the world currency because they're not focused on that. So what they are focused on is, like I talked about before, with the decentralized computing, a lot of financialization of different assets and so on and so forth. Now they have NFTs, these non-fungible tokens, which is basically like collectible items on the blockchain, and then the Turing complete smart contracts, which is the idea that you could make any kind of program effectively in on Ethereum. But the problem with putting so much power into your currency is that it has technical costs, right? So they had this classic event called the DAO, the Distributed Autonomous Organization, where loads of people put all their money into a contract that was going to run a organization which was funding itself and which nobody was in control of. But it then subsequently got hacked, and all the investors lost all their money. And then the Ethereum developers came along and they rolled back the transactions to reimburse everyone, which was super controversial, and it led to the creation of Ethereum Classic, which split off because they didn't agree with rolling back all the transactions. But when they did all of this transaction rolling back and stuff, it showed that the community was willing to reverse payments. So that what I was saying before about things being uncensorable or being unmonitored by a central authority, well, even if Ethereum has a decentralized network, it actually, in history, it seems that there is actually some sort of central force that will be happy to intervene in the markets, and they probably need that capability to some extent, because what they're trying to do is so complicated, right? Making all these contracts and so on and so forth. It's very easy for somebody to just leave a bug in there, and then it's very easy to have a bug even in regular payment coins like Bitcoin or Bitcoin Cash. But once you add another level of complexity, it gets even more likely. And so you just cannot run a global scale currency on something that is pushing the boundaries like that at such a breakneck speed, because while cryptocurrency is innovative, it still needs to have a certain amount of stability in order to be trustworthy to investors and to the everyday person who does not have time to be following the 100,000 different things that is going on in Ethereum. So one example of that is their coin issuance. So I believe originally Ethereum had a fixed supply, right? Like Bitcoin has 21 million, Bitcoin Cash has 21 million. Some coins have different amounts, but in Ethereum they had some sort of fixed amount that we were going to get to that, and that was going to be all the Ethereum. But then they changed their mind at a certain point and decided that for economic reasons or technical reasons or whatever reasons they had, that they were going to change it to be inflationary. And I don't know the exact numbers, but they basically tweaked it so that there would be more Ethereum mined forever, that it wouldn't cap out like it would in Bitcoin Cash. So they said they had all their arguments and reasoning, and they decided that that was what they wanted to do. They wanted to have an inflationary instead of a deflationary system. And now recently they've changed their mind again, and they now want to have an unknown system. So I have a link here to this EIP, which is an Ethereum improvement proposal that they had called 1559, which is currently quite controversial in their community. And the one little extract that I've taken out of it here, it says, by burning the base fee, we can no longer guarantee a fixed token supply. This could result in economic instability, as the long-term supply of Ethereum will no longer, or Ether, will no longer be constant over time. While a valid concern, it is difficult to quantify how much of an impact this will have. If more is burned on base fee than is generated in mining rewards, then Ether will be deflationary. And if more is generated in mining rewards than is burned, then Ether will be inflationary. Since we cannot control user demand for block space, we cannot assert at the moment whether Ether will end up inflationary or deflationary. So this change causes the core developers to lose some control over Ethereum's long-term monetary policy. So again, this might be a great idea or a terrible idea. It's very hard to say. Only time will tell. But what it is definitely unstable. Is that because Ethereum are pushing the boundaries in terms of their computing and their network and what can be done about it and stuff. It seems that whenever they get to they identify a problem, and they even identify valid or legitimate problems, but their solution to that is usually just opening a new can of worms. So like in this case, okay, maybe they identified some problems with having a fixed supply of currency, right? I don't think that's really too much of an issue, but maybe they decided that it was. And so then they changed to inflationary, but then they discovered some more problems with that, or the issues they've had with fees or whatever. So now they're trying to find another solution to that. So they're moving even further off the map in terms of uncharted territory. And so, like I said, while cryptocurrency is innovative, you still want to be fairly aware of you still want to be fairly aware of maintaining some stability to have confidence for investors, and you're not going to get to globally adopted scale when you're changing things around at breakneck speed like this, and just whatever is the whim of the day is what's becoming popular and implemented in the community. So for that reason, I think Bitcoin Cash has pretty stable, clear principles that it's going to be a digital, peer-to-peer electronic cash for the entire world. There's a fixed limit of 21 million. The network is going to scale in a certain way, and everybody's on board with that, right? I don't think there would be any plans to be changing the coin issuance, or to be trying to make the world's most complicated other software running it. There will obviously be some smart contracts, for instance, like with AnyHedge that I talked about last week, but I think that will still be subservient or in service to the idea of being a useful payment currency, rather than being the sort of primary goal to make the most complicated thing possible. Okay, so I mentioned before about the network effect. I've actually spelled this wrong. It should be Metcalfe's law. So Metcalfe's law says that the value of a telecommunications network is proportional to the square of the number of connected users of the system. n squared. So the idea is that in a currency, or in a social network, or in the internet, or in telephones, or anything like that, as you add more people to the system, it gets better at a faster and faster rate. It kind of comes back to that exponentials that I was talking about before. For instance, if you have a telephone and one other person in the world has a telephone, then you can only call that one person, and the utility is fairly small. But if 5 people have a telephone, well, then suddenly not only can you call 5 other people, but each of those 5 people can also call the other 5 people. So the amount of connections is way increased. And then if 100 people have telephones, then the amount of possible people that can talk to each other is going through the roof, right? And this just gets bigger and bigger as more people are added. So this is why networks tend to be sticky, which is that once MySpace gets to be dominant, then in general MySpace will be very difficult to outcompete. Of course, that does happen, and Facebook did outcompete them, but they needed to have a very, very strong user case to convert people from the previous bigger network onto their smaller and growing network. And then you could see, for instance, Google, what's it called? Google Circle, or I don't really remember the name of it, but Google tried to make their version of Facebook, and it failed. It didn't convince users. It wasn't so convincing that it could create users that are willing to switch. But cryptocurrency, or Bitcoin Cash specifically, can be that good. So like to convert somebody from one thing from a bigger network to a smaller network, your smaller network can't just be like, let's say, twice as good, or 3 times as good, or 5 times as good. It needs to be 100 or 1,000 times as good to be worth the effort of switching from the bigger network, where there's more connections as per Metcalfe's law, to the smaller network where there's a smaller amount of connections. You need some fundamental distinguishing factor. So we are seeing that in Bitcoin Cash with regards to Bitcoin, right? As the number of transactions is indicating whether people are switching or whether they are just new people are coming into Bitcoin Cash. The number of people transacting on that network, the number of nodes, or the equivalent in Metcalfe's law of the number of people who have a telephone, the number of people willing to transact in Bitcoin Cash, is increasing. So in that sense, it even despite the price, and in fact it is actually rather unrelated to the price, not entirely, because the higher the price goes, the more people get interested in it and are convinced to invest. But you can have a lot of users without necessarily having a very high price, and you can have a very high price without having a lot of users, which is what the BTC fork of Bitcoin currently has. And there's just one other thing that's important to note with a currency as compared to another kind of network, like I was saying about Facebook and MySpace, is the opportunity cost. So when you're on a network like MySpace, even if Facebook is the smaller website, it's very it's simple enough to post on both, right? You can have MySpace and you can have Facebook, so you can post all your content on MySpace, and then you can just copy and paste it and also post it on Facebook. So even though that takes a little bit of time, right, you would prefer that you only had one because all your friends were on one. If your friends are kind of split around, you can copy over your content and get most of the value of both. This is less true in currencies. It's not entirely untrue, but it is less true in the sense that any $1 that you have in one currency is $1 that you don't have in another currency. So it is possible to have $100 of USD and $100 of Bitcoin Cash, but so you can spread yourself out like that. But every $1 you can't. But in that scenario, you can't have $300. If you know what I'm saying, you can't. Every $1 that you put into USD is $1 that you cannot be putting into Bitcoin Cash or any other currency, or vice versa, right? So in that sense, the network effect is much stronger, because while you can have a small amount in a lot of different currencies, in general, if all the commerce is happening on one network, you will want to have all your money on that network so you can transact with everybody there easily. Okay, so Satoshi actually predicted this, which is quite incredible. So I've got a quote here, and I think this would have been from probably 2010 type of era, where Satoshi, the anonymous founder of Bitcoin Cash and cryptocurrency as a whole, said, "It might make sense just to get some in case it catches on." This is about Bitcoin. "If enough people think the same way, that becomes a self-fulfilling prophecy. Once it gets bootstrapped, there are so many applications. If you could effortlessly pay a few cents to a website as easily as dropping coins in a vending machine." So Satoshi had the idea exactly right, which is that as people acquire cryptocurrency, as they acquire Bitcoin Cash, then the network grows and it becomes a more attractive prospect for everybody else. So when Bitcoin had 3 users, let's say, if the 4th user joins, that makes it a better prospect for the 5th user to join, and in turn that makes it more for the 6th person, and that process effectively never ends, right? So it's this kind of process which is how cryptocurrencies as a whole can outcompete the US dollar or fiat currencies, because as we talked about, the fiat currencies have a much bigger network effect. They already had thousands of people you could trade with, or millions of people you could trade with, and everybody was already used to that system. So if there was no differentiating factor, then the first person would try Bitcoin, or the second person would try it and think, okay, this doesn't make any sense though, and they would just stop using it. In order to outcompete the network effect, the new currency needs to be so good or so different, or offering something so powerful that it can compensate for the fact that you are moving to that smaller network. And obviously cryptocurrencies do have that unique advantage, or they are that special compared to fiat currencies, because people have been switching basically en masse, right? And the bigger cryptocurrency grows, the more it is able to the smaller the network effect grows of fiat currencies, and the bigger the network effect grows of cryptocurrencies. So as the bigger cryptocurrency grows, the more sure you can be that it will continue to grow, right? So that is basically what we've been seeing. So I've got some charts here showing the growth of the total market capitalization of all cryptocurrencies. So if we're starting, my chart here starts in May of 2013, but to be honest, you could even go back further, and it just shows that cryptocurrency growing up from less than 1 billion, half a billion, 500 million, whatever it was at the time, up to about 15 billion, and then settling around the 10 billion type of range. And then since then, it's obviously gone up again past 500 billion in about January of 2018, and then past 1.5 trillion in January of 2021. So people are flooding into cryptocurrencies, and each new wave of investors just makes the network of cryptocurrency better and accelerates its development. So, I mean, you don't need any more argument than that. You don't need to understand all the reasons, the limited supply or the lack of central control or anything else to really see that cryptocurrencies can and will outcompete fiat currencies, because with this trend of growth, what would stop it, right? We're going to look at a couple of objections people have as to what would be the break, what would be the cutoff point where cryptocurrencies just stopped. But for me, when I first found out about this, started reading about it in 2013, and I thought, what are all the reasons that this trend would stop? And basically I couldn't find any. And until today, that is proven true. Like, obviously there is manias, crypto goes up or it goes down in price, or it has wins and losses in terms of getting adopted globally. But on a longer time frame, the adoption rate is just absolutely staggering, right? So let's just maybe jump back here and consider, okay, so we've talked about, so that's how Bitcoin Cash can outcompete fiat currencies, right? It's pretty much just crypto as a whole is going to massively outcompete fiat currencies. So that's why, so Bitcoin Cash is just one part of that, right? And then we talked about how Bitcoin Cash can outcompete the other cryptocurrencies because they're either not direct competitors or because it has the network effect over them, right? Okay, so, and we can see an example of how cryptocurrency is outcompeting fiat currencies in the fact that governments are starting to roll out their own versions, basically, of cryptocurrency. So I have a screenshot here of this is the digital yuan that the Chinese government were announcing and working on and releasing last year in 2020. And I haven't checked up on the latest of what stage that is at. But basically, the governments have realized that they are being outcompeted, and so now they're releasing apps which are effectively cryptocurrency wallets, but just with their government currency as the currency you can trade. But these bank coins are going to be outcompeted by cryptocurrencies because firstly, it's a sign of, they say the most sincere form of flattery is imitation, right? So that's what governments are doing to cryptocurrency. But one way or another, these central bank coins are going to compete against cryptocurrencies on the open market, and they're going to lose. And the reasons are the central control, like I talked about before, with stable coins and with with Ripple and all those sort of things. When you have a central control, it just is, it's just worse. It just means that all of the innovation and all the ideas and everything all have to be signed off by somebody. Whereas if you compare to like a permissionless system like cryptocurrencies, where anybody can just, if they have an idea, they can just start doing it. And if it works, then the market will reward that and they'll carry on doing that. And if it doesn't work, they'll stop. But they can just go for it, right? And ultimately, there's no government in the world with the resources or innovation or market force of the free market. Like the internet is a classic example of this, which is that if the internet, the more government controls there are on the internet, the less new apps and things are developed. Like all of the great websites and all the apps and stuff like that, it's 99% the free market, and just there's only very limited amount of government-based applications on the internet, and I think everybody loves that, right? So cryptocurrency is exactly the same, which is that when you have the permissionless innovation, that people do it because they're passionate or because they have a profit incentive, or they have a really good idea, and they want to make something, if they can just get out their laptop and start cracking away at it, like on Bitcoin Cash, they can just start making an application or start accepting it at that store. That's obviously going to be more attractive, and in the long run be more useful to the people and the economy than a centralized government one, which says that you have to accept this, but people might not really want to, right? So at any opportunity, they're going to find an ability to sell their digital yuan and get Bitcoin Cash or any other crypto, right? Which they like, but I think in large part Bitcoin Cash. And that's the same with every currency everywhere around the world. Like, it's very difficult as a government puts in these central bank apps and so on and so forth to stop people trading them for cryptocurrencies. Obviously, some countries will have greater or lesser restrictions on those, but ultimately cryptocurrency is peer-to-peer, right? There is no central source of it, and therefore if you have this app going on your phone, then I can trade that for Bitcoin Cash with anybody just on the street or at a house party or wherever I'm at, or a store owner or anybody really. So in that scenario, the government, they can't clamp down on every single person everywhere in the world. Nobody has that kind of control, and so one way or another, the currencies are going to trade on the free market, and pretty quickly everybody's going to figure out that these central bank currencies are devaluing against cryptocurrencies, especially cryptocurrencies like Bitcoin Cash that have a limited supply. So there's not more of it being created by a central authority, and therefore, as if supply is capped, as demand rises, then the price will rise. And in contrast, the centralized currencies, there are more units being created by the government, and so they're devaluing everybody's money. And individual investors are not that stupid. They'll figure that out, and they know, okay, well, if my money is losing value if I have it in this government coin, but it retains value or increases in value in cryptocurrency, well, then I should sell my government coins and buy cryptocurrency. And that's what, exactly what we've been seeing on this previous slide where I talked about cryptocurrency getting adopted in waves. So that's how Bitcoin Cash is going to outcompete fiat currencies, right? So it's going to outcompete the other smaller cryptocurrencies like we talked about. It's going to outcompete the fiat currencies like we talked about. And I mean, here's a few objections, right, that people have to these kind of ideas that I've been talking about. So from people who don't really know much about crypto, and if you put this idea to them that fiat currencies are going to get outcompeted and Bitcoin Cash or any other cryptocurrency is going to just completely take over, then I've got some main points that they often make, which goes something like this. So the first one is basically any kind of variant of I don't get it, or I don't like it, or something like that, right? It's too complicated, or whatever their objection is. That's basically what they mean, is that they don't understand it. And that's the same for any technology, right? The internet, nobody understood the internet to start with, or mobile phones, or email, or literally anything that has been developed ever. People start out not understanding it, and then over time they learn and they get more comfortable and familiar with it, and before too long it just becomes assumed. And that's exactly the same thing that we've seen with cryptocurrency. So on one hand, people just get used to new technology. Time goes on, young people adapt, old people die off, or they don't, or they get with the trend, right? So that's one huge force for cryptocurrency adoption. And a second one is that user interface development and engineering hides complexity over time. So it's definitely decreased in complexity, how hard it is to get cryptocurrency. and how hard it is to use because the wallet software has got better and the exchanges have got better and the documentation and the explanatory videos and the tutorials. All of that is constantly getting better and making it easier and easier for people to get involved in cryptocurrency. So it's they meet in the middle, where on one hand people are getting more used to the idea, and on the other hand it's also getting easier for them to get involved. Okay, so then you have an argument which is basically that Bitcoin will never replace real currencies, right? And that's pretty easy to dismiss. That's basically just haters are going to hate, right? In the last 10 years, cryptocurrency has just exploded in popularity. There's pretty much no technology in the world which has been created as quickly or had as much interest or adoption as fast as cryptocurrencies, right? It's now more than a $1.5 trillion type of industry. Like, I don't think there is any other industry that was invented and has just grown at that insane speed. So, I mean, anybody who says this is never going to happen is just showing their own inability to see the future or follow the trend, because it's pretty obvious that cryptocurrency just grows and grows and grows at an insane rate. And if they don't see that, well, they don't see that, but that doesn't mean it's not happening. Right, then they talk about volatility. It's too unstable. It's never going to work because people don't want to lose 20% of their money overnight, etc., etc. Okay, so we talked about that already in episode 7, but the fact is that there's stable coins. So like we talked about with Tether and USDC, if people want to have a stable amount or any hedge on Bitcoin Cash, then they can have a stable amount if that's their priority. And the other thing is that obviously volatility is not a problem, because as we've seen, this huge growth in cryptocurrencies, obviously that's not a problem. If it was a problem, it would have already stopped cryptocurrencies, but it hasn't. It's been volatile and it's been growing. So obviously it isn't really that much of an issue. Okay, then we get on to regulation and banning. That's another common objection or complaint, right? Is that, if this gets too big, the government will ban it, or they'll block it, or whatever. And that is true. Like, maybe that will happen, and in some places in the world we have seen some of that. But generally, it's been quite an ineffective strategy for governments around the world. And the reason is because the countries are all in a prisoner's dilemma against each other. So if, let's say that any particular country decides they want to ban cryptocurrency, they want to ban Bitcoin, they want to ban Bitcoin Cash, they want to ban every other crypto, all that does is it takes them out of the economy. Cryptocurrency is global and it spreads via the internet. So in that scenario, people will just move their cryptocurrency companies or their developers or their adoption, they'll just take it somewhere else. And that other country who is accepting to cryptocurrency will get a huge influx of capital, of resources, of economic growth, as all the industry is happening in their country, and not in the country that bans it. So every country that bans it, as they put in those bans, all they're doing is they're taking themselves out of the race, and they're just accelerating ahead every other country, essentially. And the more countries that ban it, the higher the incentive goes for any country to say, right, we're going to be the cryptocurrency haven. And then obviously there's always going to be some small or freedom based country in the world that is willing to take that chance and say, we'll accept cryptocurrency. Like, if the more countries that did ban it, and historically there actually hasn't been a huge wave of bans around the world, but even if there was, then it would just become more and more obvious for some country somewhere to say, let's just make it all legal, and all the money will just flood into our country. So not really worried about that. And also, even in a scenario where the country tries to ban with the regulation and everything like that, it's just tends to be not that effective, right? Which is that in the United States now, for the last couple of decades, they've had a war on drugs, which is that they want to ban and remove all war on drugs. And yet, anywhere in the in the United States, you can get drugs if you want to get them. I definitely don't have personal experience with that, but I know that it does happen, right? People can get drugs if they want them. So if people want something bad enough, they find a way to get it, and ultimately the state only has limited enforcement powers and limited resources, so it can't track down every single person who is involved in drugs. So how are they going to do that with cryptocurrency? And that's even in the US, where they have a very strong law enforcement, and in many countries in the world, it's even less of a possibility for the government to control what's going on, right? Their own population or their own scenarios is at such a case that they want to have certain laws, but yet they're just routinely ignored because the population knows that the government can't enforce whatever rules it wants to enforce. So those two things between them basically mean that regulation and banning is not an issue. If it gets banned somewhere, A, the ban isn't going to be effective, and B, other countries will just take up the slack. Everybody will just relocate, right? It's an internet-based thing. All right, and now we've got one final. This is a bit of a esoteric point as well, but people in this sort of digital gold narrative, they will try and say, oh, well, it's like a better version of digital gold. And people who are gold bugs who really invest in that and whatever, they say, well, but cryptocurrency can't survive a solar flare, right? If there was a electromagnetic pulse around the whole world that knocked out the whole internet, well, then that's the end of your cryptocurrency. And that is true, but if there is something that knocks out the whole internet and all our global infrastructure, we're going to have a lot more problems than worrying about cryptocurrency. It'll be you want to have bullets and water stored in that scenario. You're not really going to need gold. You're not going to need cryptocurrency. You're not going to need gold. You're going to need it's going to be Lord of the Flies if everything collapses to that extent. So yeah, maybe cryptocurrency isn't that great in that scenario, but neither is fiat currency and neither is gold, really. Okay, and then people who do understand cryptocurrency a little bit, one objection they have is, well, maybe cryptocurrency can't scale, right? That the technology will hit a cap at some point, and we won't be able to get to, millions of transactions per day that you would need to support the entire planet's population, or whatever, maybe billions of transactions, especially once you throw in robots and automated trading and everything like that that I was talking about. So that's a bit of a separate topic, and I will do a separate video about that at some point. But let's just assume for the moment that that's not going to be an issue, or that there are solutions on the horizon for that. And I've got a link here to an article that people can have a look at that is talking about Bitcoin Cash operating at the scale of Visa, and there's plans to move beyond that, right? Okay, so we've talked about how Bitcoin Cash can outcompete other cryptocurrencies, and we've talked about how it can outcompete fiat currencies, especially the US dollar. So finally, we just get to Bitcoin. So I think this is probably actually the toughest category for Bitcoin Cash, to be honest. I think it will be harder for Bitcoin Cash to outcompete Bitcoin than to outcompete the US dollar, even if it happens, that it outcompetes Bitcoin and then outcompetes the dollar. I think the bigger hurdle is for it to get past Bitcoin, and at that point it will be basically unstoppable. So the arguments essentially on the side of Bitcoin, now that it has jammed up its network and they have very little innovation or solutions, their arguments essentially come down to these two-ish points. Maybe there's a third one, which is the brand name, right? So Bitcoin has a bigger brand that people trust more, so that's a kind of network effect type of argument. But really what comes up a lot when people talk about this is the price. So like we talked about before, it's 100 to 1 ratio at the moment. But the reason I'm not worried about that is because the price changes all the time, right? The price is not locked in stone according to anything, right? If your argument was that the price is the price and that's the end of the story, well then when Bitcoin was $1, it should never have got past $1, right? But then it got to $10, but then it got to $100, but then it got to $1,000 and $10,000 and $50,000, right? The market changes its mind. The market doesn't just pick one thing and then the world stops and the price is fixed forever and it never changes. No, that's not the case. The cryptocurrencies between themselves are constantly rising or falling above each other, and cryptocurrency as a whole is constantly rising or falling against fiat currencies, right? So it's just a process, and you've got to think in the long run about what the value is. So then the second argument, which I would say is probably the best argument for a Bitcoin supporter, the one sort of legitimate concern that they do have as to why it would be better than Bitcoin Cash, is the hash rate, right? That most of the miners in most of the miners of Bitcoin and Bitcoin Cash, most of them are on Bitcoin. Therefore, it's a bigger network and it's more secure. And that's true, right? That is actually a good point. But the counter argument to it is that it's essentially just the price argument by a different name, which is that the miners they're trying to run a business, right? They're trying to be profitable, and therefore, if the market price is 100 times higher on Bitcoin, then 100 times more miners will go on that because there will be more profit to spread around. And then once 100 times more are on that thing, then the two coins stabilize and they are equally profitable to mine. So if the price goes up on Bitcoin Cash, then more miners will switch over to it. And consequently, the other way around, if the price goes down, then less miners will switch onto it. But the mining is actually not related to the transaction throughput directly, right? So Bitcoin Cash can operate at global scale with only 0.00001% of the Bitcoin hash rate. It would be a lot less secure, but it wouldn't actually break, or there wouldn't be any problems in terms of processing a huge level of transactions. So as regards to the hash rate, to me it's sort of like the price, it just explains that, which is that as Bitcoin Cash adoption spreads, and as the value on the network increases, eventually the market price will rise, as everybody realizes that Bitcoin has the brand name, but it's still quite a high fee, inefficient, useless network, and everybody switches over to Bitcoin Cash. And once they do that, the miners will just follow. It will just be a natural sort of conclusion to that, right? So then the arguments for Bitcoin Cash as to being able to overtake it is that the efficiency is just so much higher on the Bitcoin Cash chain. So I took this screenshot yesterday. So it's currently about 4,962 times more expensive to transact on BTC Bitcoin than on BCH Bitcoin Cash. And this number fluctuates, but it has been even recently as high as 15,000 times higher, right? Because the Bitcoin Cash fees are less than a fraction of 1 cent, and the Bitcoin Core fees can be $5, $10, $15, and they're only trending higher over time because, as we saw before, they have a fixed transaction limit, and when they have a fixed amount of transactions, then everybody's competing to pay more than the next person to do their transaction. So in that scenario, Bitcoin is actually fighting uphill. The network gets worse the more people that adopt it, because as more people adopt it, there's more competition and the fees increase, right? So it's like they're fighting into a headwind, and the more progress they make, the stronger the wind comes to be pushing them back. So where are all those fees going? Well, they're going into the miners' pockets. And as we were talked about just before, the mining the miners then spend that to build, more infrastructure and whatever, but nothing anchors that to Bitcoin, and that if the price changed, all that money that the Bitcoin community spent spending their own money on fees to give to the miners could then just switch over and be supporting Bitcoin Cash. And I think there's actually a very good example of how the Bitcoin Cash community is more hardcore and they are more dedicated than BTC in the number of nodes on the network. So when the two currencies split, there was a lot of disagreement about, okay, if we're going to raise the cap, then it will be bad for node operators because they won't be able to store all of the demands of this bigger size of the network. And so in that way, everybody disagreed about that, whether, how big of an impact it would be. But we've now got some data. And like I said before, the price is just about 100 to 1, but the number of nodes is about 9 or 10 to 1. So the Bitcoin Cash, or Bitcoin, is 100 times more valuable than Bitcoin Cash, but it has about 10,000 public nodes on its network. And Bitcoin Cash is 100 times less value, and yet it has about 1,200 or nearly 1,300 on its nodes on its network. So the price ratio is 100 to 1, but the nodes ratio is about 9 to 1. So even though the complaint was that Bitcoin Cash network would not have enough nodes, well, actually, there's a much higher percentage of the Bitcoin Cash community that either for, if they're running a business and so they need to run a node, or if they're just very passionate and dedicated to the project they run at node, the percentage of people willing to do that is much, much higher on Bitcoin Cash than on Bitcoin. So that has not been a problem. And in addition, node operators like to think that they're very, very important to the success of the currency, but I disagree with that because it's not bad to have nodes, just like when we talked about in a previous episode about speculators. It's not bad to have speculators in your economy, but it's much more important to have, let's say, entrepreneurs, right? Because they actually contribute value to the economy than speculators. In the same way, it's helpful to have nodes. They're not bad. It's not that you don't want them, but they're much less important than economic users and businesses and real economic value, right? You could start a new fork of Bitcoin called, Bitcoin Jeremy. I could start that tomorrow, and if I had a lot of money, I could run 40,000 or 200,000 or 1 million nodes in an AWS data center. But that wouldn't make that network very valuable at all. It would just mean that I was spending a lot of money on having a lot of nodes, right? And in the original design of Bitcoin, the nodes, and there was no nodes basically, the nodes were the miners. He does talk about nodes in the network in the white paper, but what he means is miners, right? Because the miners secure the chain, so it is quite important to have a lot of miners. But non-mining nodes, which were sort of a later invention, they do help because they propagate around transactions, but you can basically get away without them. So I think Bitcoin Cash is already out competing with its number of nodes, but even then the disparity of nodes is not that critical of an issue. And once again, if the price rises on Bitcoin Cash, I'm sure we'll get a lot more nodes. So yeah, and effectively the community is really what makes the difference between the two as well, which is that the Bitcoin Cash community has a lot of cryptocurrency veterans. It has the people who were there in the early days, and it also has very productive members, right? People are excited about it, and they will start podcasts like this one, right? Or they'll start businesses, or they will wear shirts with the Bitcoin Cash logo, or they'll make artwork or cakes, or all the different things that I've been showing on the podcast. With the Bitcoin community, they're not as productive, right? The main thing that they seem to do is they go on Reddit or on forums or whatever, and they post about how they're getting rich, right? They're not playing the long game. They're not thinking about how can we spread this to the entire world. All they're trying to do is have like digital pet rocks, right? They've bought their Bitcoin, which they think is their digital gold, and then they're just waiting and hoping that if Tesla or some banks or whatever buy their coins and just do the same thing to just sit on them, digital gold like locked in a vault, that would be a very useful currency. But that's completely backwards, because the whole use of a currency is that you can trade it, right? So if there's not people buying and trading for real goods and services, then in the long run your currency is just going to fail. And in fact, gold is used or known for storing value because it used to be a currency, right? It was a currency first, people were trading it for goods and services, and then because it had that history, it established that reputation. But Bitcoin, BTC, now is not being used really for pretty much any commerce, definitely not for like casual transactions, and the same things that we've already talked about where they're capped. And one other thing to think about is that when it comes to the US dollar or to fiat currencies, cryptocurrency grows against those because it has such a passionate and involved and proactive community, whereas fiat currencies don't, right? The US dollar does not have hundreds of thousands of people going out there saying, hey, use the US dollar, like it's great, look, we built this new app, we built this new thing specifically for that currency. You could say, okay, maybe governments or maybe the banks are invested in the success of that currency, but they aren't monolithic entities, right? A bank or a government is just made up of a number of individual people. And if those individual people have no allegiance to the US dollar, or they can see that, well, I might need to switch and be on the cryptocurrency train or I'll get left behind, then they're going to do that, right? I'm pretty sure that we've been seeing, especially recently, a lot of banks have been buying cryptocurrency, right? The banks themselves, and I'm sure the people in the banks are also the employees and the CEO and whatever. I'm sure they're buying cryptocurrency too. And the same with governments, where the government can say, oh, okay, maybe we're going to have a stance against cryptocurrency or whatever. But as I've explained, if cryptocurrency is spreading around the world into some other country, those government employees are still going to be thinking, wait, I'm going to be left behind on this trend. So the defection of their individual members over to the cryptocurrency side is basically inevitable in that sense, right? Like nobody has a forum where they're just sitting there discussing the Australian dollar and how it's the best thing and how we can create new apps and services and spread adoption, and nobody does that. But people do that for cryptocurrencies routinely, and that crowd of people just keeps growing and growing and growing and growing. So that's another reason why cryptocurrencies will outcompete fiat, and it's a reason why the Bitcoin Cash community specifically, I think, will outcompete Bitcoin and pretty much all other cryptocurrencies as well, because it has the most hardcore, the most committed community, and that's a result basically of the trauma that it's been through, right? Where Bitcoin Cash had to fork away from Bitcoin and give up the the brand name and all the momentum and everything that the Bitcoin community had. It had to split off because it just believed so passionately that we should have a peer-to-peer digital currency, electronic cash, instead of a gold or whatever other ideas. And then later on, there was the Bitcoin SV fork and then the Bitcoin Cash ABC fork that both also left the communities. They had different ideas about things that they wanted to do, or their own, technical changes or whatever they wanted. But they left, right? And so the hardcore that is still there in Bitcoin Cash, like that is a very battle-tested community, right? They've been through a lot, and they're still still working away at it, and anybody who's left in the scene, they're there because they want to be there, and because they definitely know that this is the one, this is the best one. This was Satoshi's original idea, a peer-to-peer electronic cash, and that's what the world needs, and that's what they're fighting for, and that's what I'm fighting for as well. So hopefully the listeners get involved in that too, but that's up to them, right? Everybody can contribute in their own way as they sort of see fit. So yeah, really, that's it. Now, that's pretty much the end of the show. As usual, you can donate. The slides and resources I'll link at the bitcoincashpodcast.com. I still don't think I've got any Patreon subs, but that's fine. No big deal there. And I think the stream was not really working. It seems to have gone out. So I did cut it off halfway through the stream, so I don't think we're gonna have any viewer questions, unfortunately, but I will be trying to yet again figure out a solution for my internet issues, because I think it would really be cool to stream these episodes live and have live interaction and all that. But as usual, I hope you enjoyed. Thanks for listening. Should be back with a guest hopefully next time as well, and I'll leave it there.
He pulled out his laptop and bring up the site, looked at me and said, "This will change your whole life." Then he started explaining the basics to me. The miners make money by taking a fee every time a transaction is made and complete, and they work every minute and day of the week. A guy named Satoshi created this all. He's the mastermind of it, the brain and the balls. There's a lot more to say, but before I begin, just tell me right now if you're out or you're in.